Joining us now, Mike Wilson, Morgan Stanley's Chief U.S. Equity Strategist and Chief Investment Officer. Mike, as always, great to see you. Same question I posed to Professor Siegel moments ago. Are you surprised at the extent, 1.4% of the sell-off in light of this tweet?
Well, hey, Wolf, thanks for having me on. No, I'm not surprised at all. I mean, I think the market has been anticipating that this bill had a better chance of getting done, at the end of last week and into early part of this week. Obviously, there's a lot going on. And look, there's just a lot of uncertainty. I mean, we try to make a bet on kind of whether this is going to get done before the election. We got about a 1/3 chance, we think, of this happening before the election. I think the more important message, though, is that we do think there will be some fiscal stimulus at some point, either before or after the election. And it's just a matter of timing. But as I said before, the market was up a bunch yesterday, kind of on the hope that they were making progress. So, of course, it's going to trade off on that. And this is kind of what we expect for the next couple of weeks. This is the problem, is that it's going to remain volatile probably for the next 3, 4, 5 weeks until either the election comes and goes or we get fiscal and a couple other things that are still bothering the market. So it's going to remain choppy. So it doesn't surprise me at all that we sold off on this news.
What's the short-term downside if we don't get anything before the election, given the risks the election itself brings as well?
Well, then we go back to kind of our technical analysis, which you've been writing about lately, which is, the correction that happened in September was kind of long overdue. We thought it would happen in August. It happened in September. And then when that happens, you got to look at your kind of long-term support areas. So worst case scenario, you'll probably go back to the 200-day moving average, which is around 3,100 on the S&P 500. That won't be a straight line because there's always going to be hope that something gets done in the 11th hour. But that is, realistic downside support and realistic downside case if nothing gets done before the election.
So just to harp on the issue a little bit more, you have been leading, Mike, on this idea of a V-shaped recovery, at least in the markets, but I think you've also tried to sniff it out here in the economy. Does the postponement of stimulus till after the election do anything to disrupt that? Does it make that harder to achieve a V?
Well, it definitely takes a little edge off the V, right? So what happens is the V becomes a bit flattened out. And we've seen that in the data a little bit lately, Sarah, as you know. I mean, the economic data started to flatten out a bit, still very supportive of the recovery story. So it's just a delay. And look, I think we all have to, be honest about, the fact that the market, I mean, look, we were bullish on the market this year, but I didn't think we'd get to 3,600 by Labor Day. But there we were. So taking a little wind out of the sails isn't such a bad thing, assuming that we do eventually get that stimulus. I don't think we need stimulus in the next 30 days for the economy to kind of stay afloat, meaning there's no risk of a double-dip recession in the next 30 days if we don't get the stimulus done. The main message I think I want to leave with your listeners is we still think stimulus is coming. It's just now a timing question, whether it's before or after the election. Our best guess is it's probably after the election.
Shepard Smith here. Thanks for watching CNBC on YouTube.